All right, people, we got to talk once again about Kevin Helmut Paffrath, a.k.a. Meet Kevin, because I happen to notice something interesting on YouTube. Bloomberg Television actually covered Meet Kevin closing his garbage ETF that significantly underperformed the S&P 500. Why they chose to cover the ETF of a failing loser YouTuber, I don't know. But that's what they chose to do. So we're going to play the video and we're going to react to it. I know I'm posting this on the second channel because the main channel, we pivoted the content over there. So I just want to say, if you're new here, I have a very long history with Kevin, okay? I originally exposed that he got a DUI back in 2022. He came on my channel. We went at each other. He doesn't like me. I don't like him. He's the first YouTuber to ever send me a copyright strike. I eventually got that fixed. He lost. He was able to file a privacy complaint or whatever. He filed some other weird complaint and got one of my videos taken out. Anyway, bottom line is, me and this guy have a very long history, and I just want to say a few things about him before we react to this video, okay? Most people have already woken up to the fact that this guy is nothing more than an absolute liar, grifter, used car salesman, con man, every bad thing you could think of in the book. That is what this guy is. But I need you guys to understand the reason why he closed that stupid ETF is because he finally got exposed for the fraud that he is. For years, he made people think that he was a genius investor and that he made his wealth from investing, which is a lie. He is a very charismatic individual, slick talker, and a great salesman. He used those skills to sell his $500, $700, $1,000 course, whatever the hell the price is nowadays. And that is how he made his money. Now, some people are going to say, well, he was a millionaire before he started the courses and all that. Yes, you're right. But that was through real estate. When it comes to real estate, he knows what he's talking about. Yes. When it comes to everything else, he does not. All this guy simply is the Temu version of Grant Cardone. That's all he is. He's not as good of a grifter as Grant Cardone, but he's the knockoff brand. That's all this guy is. Now, let's go ahead and play this dang video and see what Bloomberg got to say about Kevin Helmut Paffrath.
Tell us a little bit about Kevin behind the Meet Kevin ETF. He kept this fund going for about 2 years, but as Katie was just telling us, poor performance doomed it. What was the premise behind this fund?
I think there's a couple of different aspects to this story. One is what you just pointed out, which is that he was running an ETF that was actually lagging the market pretty heavily, even though he is a...
Y'all heard that? Let's go back. Let's go back. He was lagging the market pretty heavily. And then she was going to say, even though he's a YouTuber who basically claims that he beats the market. But then you launched your ETF where you're the one picking the stocks and you significantly underperform the market. What does that make you? A fraud. That's what that makes him. Let's go back.
Which is that he was running an ETF that was actually lagging the market pretty heavily, even though he is a stock picker. So he was choosing his own stocks that were going into the ETF. One of them, for instance, was Yelp. There were only about a dozen or so companies in the ETF.
Yelp? What the heck is Yelp doing in your portfolio? By the way, I took a look at his portfolio. It was terrible. It was awful. He had all these random companies in there. He had like Enphase and Tesla and I don't know, Yelp and just all this random stuff. And then he had like a triple leverage ETF in there. It's like he just had a very weird portfolio in that ETF that he was running. Let's keep going.
Along with a leveraged treasury ETF in there, but it really lagged the market pretty heftily.
So it feels like the premise behind it was trust me.
Yeah, pretty much. Which, I mean, if you think about, a lot of these ultra concentrated.
And that's true. That was the sales pitch. There was no track record or a big name. At least Kathy Wood has a big name. He didn't have any of that. There was no, hey, I'm a well-known investor in the investing community. I got a track record that you could go see. We've done this. We've done that over the last 5 years, blah, blah. He didn't have any of that. His only sales pitch was, trust me, bro, I have 2 million followers on YouTube and I got a $20 million net worth, which, by the way, did not come from investing, but I'm not going to tell you that. So trust me, bro. That is exactly what it was. And all the people who invested in this ETF are either extremely naive or just downright stupid, because there were so many people who warned you, people like me, who have said for years that this Me Kevin guy is a liar, a grifter, and is not who you think he is. And instead of investing your money in the S&P 500, if you bought Me Kevin's ETF, you significantly underperformed, you essentially lost money. Those are gains that you lost out on that you could have gotten had you invested in the S&P 500, but instead you trusted Me Kevin's PP. Like, crazy.
Active equity ETFs. That's basically the pitch. You should trust me because I'm so smart. So apparently that didn't quite work out here. But talk to us too about the economics of this. This is something you and I talk about all the time, the brutal economics of the ETF industry. I mean, if you combine the fact that it didn't gather a lot of assets, not a lot of fee-bearing assets, with the upkeep costs, I have to imagine that's some pretty difficult math.
Right. That's the other big aspect.
So basically what she's saying there is not enough people invested in it where he could collect the money on the fees to make it worthwhile to cover the cost that it takes to run that ETF, right? Costs a lot of money to have your own ETF and to continue to run it. And the way that they offset it and also make a profit is through these things called expense ratio. Basically, expense ratio is these little fees that you pay. They take it out of the money that you put in. These are fees that get paid to them, and that goes to the overall cost of running the ETF. And then the rest of it pretty much goes in their pocket or wherever it goes. But that's essentially what happens. And the funny thing about Me Kevin is he actually had a pretty high expense ratio. His expense ratio was way higher than had you just invested in VOO, like the Vanguard S&P 500 ETF. So you lost money both ways. Not only, if you invested in this ETF, not only did you lose by you significantly underperformed the S&P 500, but you paid more money to him in fees than you would have had you just invested in VOO. That's the crazy part about this whole thing.
To this story, I think, and Me Kevin, he obviously has a really large YouTube following. He put out a video announcement saying, I'm closing this ETF, and he actually laid out a lot of the costs that are associated with running an ETF, which is, I feel like, an untold story of the industry, in that it can be very expensive to just upkeep with your ETF on an annual basis. So if you're not attracting a ton of assets, then those costs can really add up. And in the video, he said he estimates that he lost something like $1 million, even though the ETF actually charged a pretty high.
Bro lost $1 million in his little ETF project. Does this sound like somebody you should be taking investment advice from? Somebody who loses $1 million? He didn't even lose $1 million in this. Well, he actually did. He lost several $1 million in Tesla stock. I made that video years ago. But besides that, bro started a project in an industry that he knows nothing about and lost a bunch of money. And then made a whole video about it. That video's right here. And put his child in the video to soften the blow and make people feel bad for him, which we don't. And that's pretty much what you got.
Relatively high expense ratio.
Well, that's really interesting, and I'm glad you brought that up, because it feels like it is very easy to launch an ETF. You think about all these record launch figures that we've seen over the past couple.
All right, they're just going to blabber about nothing. Anyway, the bottom line is Me Kevin's a grifter. Don't you ever forget that. And yeah, that's today's video. Thanks for watching. See you in the next one.